Welcome to Bloomberg Markets. I'm Scarlett Fu. Investors taking a bit of a breather, recovering from a decidedly risk-off Tuesday. You look at the price action across asset classes today, it's more of a mixed bag. Let's start off with stocks. The S&P 500, little change, slightly higher right now. Tech and energy shares are in the green, while real estate and consumer names are a bit of a drag on the index. Treasuries are giving back some of their gains following the stronger than expected jobs figures out of ADP. Of course, that leads to different expectations for the jobs report come Friday, which is really what the Federal Reserve will be focused on. In currencies, I'm looking at the yen. The yen plunges at least 1% against all the major currencies after the new prime minister there said Japan's economy is not ready for more interest rate hikes. So you typically do not see 1.5 percentage plus moves in the yen or in currency markets overall. But there you have it, the yen weakening across the board here. And oil extending yesterday's gains following the latest hostilities in the Middle East. We will get to that in a bit. But we do want to dig into some of the individual equity movers. And first up is Tesla, falling despite posting its first increase in quarterly vehicle sales this year. Still, the numbers were a bit of a letdown, with investors expecting more of a bump from China boosting its electric car subsidies. You could see Tesla down over the past 2 days, about 3%. Also, Humana tumbling to its lowest since 2020 is now on pace for its biggest one-day drop since 2022. The stock under pressure after the insurer suffered a drop in Medicare Advantage quality ratings, which poses a threat to its long-term revenue. Now, outside of individual company movers, our attention remains focused on the situation in the Middle East with Iran and Israel. Earlier, we heard from Carmel Arbit from the Atlantic Council about the fallout from this week's conflict.
What we've seen in Israel's response and actions in Lebanon is that the military is actually just quite as capable as Israel had led everyone to believe. They've really been tracking the threat posed by Hezbollah and Iran for a very long time, had been preparing for this conflict for a long time, and had really seen this as the greater threat to Israel's existence.
For more on how this is all showing up in the oil patch, let's get to Bloomberg's Golnar Motevalli. She covers the Middle East and OPEC, and she joins us now from London. Golnar, talk a little bit about how Brent and WTI are extending yesterday's surge, and that really reflects an increased risk premium. The specific concern among oil traders is that military strikes could disrupt the supply of oil. Just how big of a player is Iran in the global oil market right now?
Well, obviously, Iran's been sanctioned now since at least 2019. Those were the most recent set of sanctions by Donald Trump after he exited the nuclear deal a year earlier. But those sanctions have probably been the most debilitating for Iran's oil sector, I would say, since probably the 1979 revolution. Because if you remember, under Ahmadinejad, Iran had a series of waivers where, whilst its oil exports were sanctioned by the US, there were a block of about 7 countries where Iran was still able to, sell oil to. Under Trump, after Obama released and lifted some of those sanctions to an extent, although they were still in place largely, when Donald Trump exited the nuclear deal, the sanctions he put in place were kind of like an effective embargo, basically, on all of Iranian oil sales. So those waivers didn't exist either. So as a player in the market, its position has diminished, but it's still been selling. It's never stopped selling. And the Islamic Republic's policy has always been that we will always try and sell oil, even if we have to shift it at massive discounts. And that's what they've been doing. They've been selling oil at big discounts to buyers in China, in other countries. It's reportedly gone disguised. It's been re-exported to other countries via routes such as Malaysia. So Iran's never left the market, but its footprint has definitely been reduced as a result of those Trump-era sanctions that are still in place today.
Thank you for explaining that, because while officially it may not look like it's a big player, clearly behind the scenes it's doing a lot. So Iran and Israel exchanged attacks back in April, and that didn't cause very much damage on the ground and didn't seem to have that big of a lasting impact on oil prices. Is anything different this time around?
I think this time the volley, the barrage of missiles that Iran fired at Israel, they were smaller, but the speed of the missiles was faster. Reportedly, these were supersonic or hypersonic missiles, according to some reports, and the warning time compared to the April strike was a lot shorter. And so there was a higher element of risk and danger involved because the Israelis and Israel's allies had less time to prepare. And apparently Iran was targeting 3 distinct military bases, and the extent to which those ballistic missiles penetrated the Iron Dome left more question marks compared to in April, when it was very kind of roundly intercepted in a very effective way.
All right, good stuff. Golnar Motevalli with Bloomberg News in London. Thank you so much for providing us some context here on the impact on oil prices. Now, the Middle East was the first topic of debate last night with vice presidential candidates J.D. Vance and Tim Walz. Here is their take on how the U.S. should approach this conflict.
Israel's ability to be able to defend itself is absolutely fundamental. Getting its hostages back, fundamental, and ending the humanitarian crisis in Gaza. But the expansion of Israel and its proxies is an absolute fundamental necessity for the United States to have the steady leadership there. You saw it experienced today, where along with our Israeli partners and our coalition, able to stop the incoming attack. But what's fundamental here is that steady leadership is going to matter.
Diplomacy is not a dirty word, but I think that's something that Governor Walz just said is quite extraordinary. You yourself just said Iran is as close to a nuclear weapon today as they have ever been. And Governor Walz, you blame Donald Trump. Who has been the vice president for the last 3.5 years? And the answer is your running mate, not mine. Donald Trump consistently made the world more secure.
For more on the debate and U.S. involvement in the conflict, let's bring in Bloomberg Balance of Power co-host Kailey Leinz, who's back in Washington. Kailey, this was a surprisingly substantive debate, given that expectations were not too high, seeing as the kinds of things that J.D. Vance and Tim Walz were talking about at campaign rallies.
Yeah, Scarlett, this was very policy-oriented. It was also incredibly civil. This isn't something we've been used to in American political discourse since at least 2016, when Donald Trump first came onto the floor. But these two were effectively agreeing with each other at certain points, which was pretty remarkable to see. And overall, it was pretty respectfully conducted, even as though their mics were hot for the entire 90 minutes. What we did see a lot of, though, was not necessarily direct answering of the questions. And that was true of the very first question of the debate, which was about the Middle East. The question was, would you support Israel preemptively striking Iran? Neither of them affirmatively said yes or no, though we did hear Tim Walz, as you saw a bit of there, talking about this idea that Donald Trump specifically is dangerous to have in power in a time in which the world is so dangerous, while J.D. Vance talked about the idea that there was peace through strength during the Trump administration. It is also noteworthy that other than these Middle East questions at the very beginning of the debate, there wasn't really much foreign policy. There were no direct questions around China policy, just a question around Tim Walz visiting China in 1989 during the Tiananmen protests, when he admitted he misspoke about the dates of his travel. But no China questions, also no Ukraine questions directed toward J.D. Vance, who has been highly skeptical of U.S. Continued support of Ukraine. So it was interesting, not just what was discussed on that stage last night, but more specifically what was not.
Right, what was not. And I guess you had to wait until about 80 minutes in before Tim Walz got a zinger off of J.D. Vance when he confronted the vice presidential candidate about January 6th. And what's the takeaway from that? Because it feels like, if anything, that the Harris campaign does want to, really highlight and make go viral, it's that clip.
Yeah, and you already have seen that circulating on social media. It's already been turned into basically an ad by the Harris campaign, when Tim Walz directly asked J.D. Vance, did Donald Trump lose the 2020 election? And J.D. Vance in response said, Tim, I'm focused on the future. Did not answer that question. Tim Walz characterized that as a damning non-answer. And that is going to be something that is definitely going to be circulating in these final 5 weeks leading up to November 5th. We did have a lot of talk about democracy on that stage last night. J.D. Vance really tried to characterize the big democratic crisis facing this republic as being one of censorship and the silencing of voices in forums like on social media, where whereas Tim Walz made it about the peaceful transition of power, essentially, in the aftermath of January 6, 2021, saying that at the end of this, no matter who wins, both sides need to shake hands and admit that there was indeed a winner. All that said, Scarlett, it is our expectation that this could be a highly litigious electoral outcome and that no one is going to want to go down easy and admit the other side won, as polling is consistently showing us this race is still incredibly tight. And I would point out the snap polling in the aftermath of the debate also showed an incredibly tight view of each of these performances. Some of them show a very narrow victory for J.D. Vance, but overall it seems like no one really won last night's debate, which was not the case in the Trump-Harris debate, where she was overwhelmingly seen as winning. I would point out that the core tenet of vice presidents is to do no harm, and everyone I've spoken with in the aftermath of the debate suggested no harm was done last night. It's just a question of whether either of them were positively able to move the ball for their teams.
Yeah, well, we'll wait to see if it shows up in any kind of the polling. Bloomberg's Kailey Leinz joining us from Washington. Thank you so much for that wrap-up of the vice presidential debate yesterday. Now, coming up on Bloomberg Markets, with the U.S. election just a month out, the world, of course, watching to see how the U.S. will engage with the Middle East. Our next guest helped form Middle East policy at the U.S. State Department for both Republican and Democratic administrations. I'm pleased to say Aaron David Miller will be joining us next with his insight. This is Bloomberg. This is Bloomberg Markets. I'm Scarlett Fu. This hour, we're monitoring developments in the Middle East following Iran's missile strikes against Israel, which began 24 hours ago. One big issue, how the U.S. will navigate this conflict, especially with less than a month to go before the election. For more on this, we're joined by Carnegie Endowment for International Peace Senior Fellow Aaron David Miller. Aaron, it is good to speak with you. You point out that we have the Jewish high holidays due to begin tonight, Rosh Hashanah, of course, and then Yom Kippur at the end of next week. But before that, Benjamin Netanyahu and Joe Biden are scheduled to speak. Why is this significant?
You know, the Israelis, after yesterday's attack, have clearly made a decision. I mean, basically, it's no secret that they're going to respond, and the response is going to be severe and very serious. But it clearly hasn't been immediate. And I think the fact that there were no civilian casualties, Israelis were lightly wounded, and tragically, a Palestinian from Gaza who was in Jericho was killed, probably by shrapnel from a falling interceptor. That the Israelis have some space and time to decide how to respond. Question is, I think the administration would like to shape Israel's response. You remember last time, mid-April, when the Iranians launched 300 high-trajectory weapons, the administration president said, take it, it's a win. The Israelis responded with a standoff missile strike against an S-300 radar facility in Isfahan. They're going to go way beyond that this time around. And the real question is, what are they going to do? And can they find a balance between doing something quite significant on one hand and not triggering a massive Iranian response on the other, which could take the Middle East to a place it's never been, which is a multi-front war.
Yeah. So what is the message Joe Biden will be impressing upon Benjamin Netanyahu when they speak? And how much leverage does he really have here?
I think 40-some days, I don't know if my math is right on this, before one of the more consequential elections in modern American history. Given the administration's position over the last year in Gaza, I don't think the administration has much. Clearly, the Israelis have moved their focus from Gaza to the north. They've hollowed out Hezbollah. They're in a very strong position to continue to do that, although I would remind everyone that there was a report several hours ago that 7 or 8 Israelis were killed in southern Lebanon in intense fighting with Hezbollah. So this is by no means over. But the message is going to be, I suspect, we understand you're going to have to respond. Jake Sullivan said consequences for what the Iranians did should produce severe consequences. But I think there will be I think they want to help the Israelis think through exactly what it is they're going to do. And what are they going to do? I suspect they could strike oil-producing facilities. They could go after conventional military facilities, Iranian Revolutionary Guard Corps, command and control. Will they touch Iran's nuclear sites? There's a compelling argument, I'm sure, that is being advanced in Israel that now is the right time. Hezbollah is weak. Iranian air defenses are weak. There's a margin for maneuver now that Israel has
Right.
pre-November 5. I'm still betting, at least on this round, that they won't.
I see. Now, I know that, Aaron, you served at the State Department in 1978 and 2003 again. And the State Department, of course, working behind the scenes carefully on all of this. The White House has tried to broker a ceasefire between Israel and Hamas for months now and gotten nowhere, and has kind of essentially given up on that front. What is the State Department doing going forward when it comes to Gaza, given that Israel has kind of moved on from that and is looking to the north more than anything else? How does the State Department continue to support the government in trying to get something to happen?
You know, I understand the focus on the State Department, but this is really an all-hands-on-deck approach. The administration has the con on this. CI Director Bill Burns has been leading these negotiations. Look, I've had 8 years of experience in Arab-Israeli negotiations. People negotiate and reach deals when one issue is present, and that is urgency. There has to be enough pain on one hand and prospects of gain on the other. It's just normal human interaction. And there is simply, in Gaza, insufficient pain and gain on the two core decision makers, Benjamin Netanyahu on one hand and Yahya Sinwar, the preeminent Palestinian decision maker, who's ensconced in a tunnel somewhere meters below ground, probably surrounded by live hostages. So there's no urgency.
Yeah.
The advantages of doing this deal are simply, in the minds of these two decision makers, outweighed by the disadvantage.
So given all of that,
it's going to be very hard.
Yeah,
very hard.
No, you make that really clear. What is the best case scenario in the region then if the decision makers are not interested in compromising and want to see everything through?
I think Israel is now confronting 3 wars of attrition. One with Hamas much diminished. They'll survive as an insurgency and affect matters in Gaza for the foreseeable future. A war of attrition with Hezbollah, which is not going to end. The deaths of 7 or 8 Israeli soldiers today suggest that the Israelis are in for a rougher ride in Lebanon. And of course, the premier event between Israel and Iran. There are no transformative, diplomatic, happy Hollywood endings to any of these conflicts. The best you're going to be able to do is deter, contain, and maybe, if you're lucky, create smart transactional negotiations that will manage and perhaps contain conflict. But nobody ever lost money betting against stability or peace in this part of the world.
All right. Thank you so much for joining us. Aaron David Miller, Carnegie Endowment for International Peace Senior Fellow, giving us some sobering words and a lot to think about here when it comes to the Middle East. Coming up, money managers plowing cash into ETFs that buy Chinese stocks after a wave of fresh stimulus, boosting confidence in that country's battered stock market. We're going to dig into all that next in our ETF report. And we're talking about what happens in the Middle East. Here's one look at an Israeli ETF. The ticker is EIS. It took a turn lower given all the conflicts this week. You can see it's down about 1.5% so far this week. This is Bloomberg. This is Bloomberg Markets. I'm Scarlett Fu. It's time now for a new weekly segment called the ETF Report, where we check in on the latest news, flows, and trends tied to exchange-traded funds. So, of course, we had to bring in Bloomberg ETF IQ co-host Katie Greifeld, who is here with us for more. And we're taking a look at China because the markets there are closed, but there's so much price action going on in China-related assets.
Oh, big time. And that's the fun thing about ETFs is even if the underlying isn't trading or the market is closed, the ETFs keep going. And so you take a look at KWEB, for example. That, of course, is the Crane Shares CSI China Internet Fund. It's the biggest China-focused ETF that's listed in the U.S. It launched in 2013. It has about $7.4 billion in assets. You're taking a look at its weekly flows here. But if you take a look at the daily flows, in the last available session, it took in $700 million. That is the biggest one-day inflow for this fund since it launched back in 2013, which is pretty amazing. And it shows you the degree to which investors have conviction right now in this turnaround in Chinese equities.
And I guess part of it is tied to the fact that investors were just not exposed at all to China. I mean, it was so underinvested that some people were even saying it's uninvestable at this point. So just a little bit of a move towards an underweight position results in huge, massive flows.
You're completely right there. And especially with this fund in particular, it has a really painful history of just absolutely burning investors. It fell by more than 50% in 2022. Oof. It took in over $7 billion in that year. So $7 billion came into the fund and it fell 50% because people, they weren't just trying to buy the dip. They were basically trying to catch the falling knife there. You think about, of course, in 2022, it was the Chinese reopening trade that was supposed to deliver those big returns.
And didn't.
It didn't. So I think it's interesting that you haven't seen investors really put their money into KWIB up until this point, basically because they were burned in 2022. But this time, given all the stimulus measures that we've gotten, I'm not sure if people are calling it a bazooka, but certainly a big bang of stimulus, and you've seen the money follow.
What'll be interesting is whether the flows continue over the next couple of days, because China's market is closed for Golden Week. National Day was yesterday, the founding of the People's Republic of China. It reopens next Tuesday, and of course, with the markets closed there, this is a proxy for how you can invest in China, especially for foreign investors. The Hang Seng Index in Hong Kong had a massive day yesterday,
big time.
Up 6.25%. The volume was so immense that brokers and traders there couldn't manage it.
Yeah.
Which just goes to show, again, how underinvested a lot of foreign investors are in China.
Coming off of a much different base than where U.S. markets are right now. And KWEB, again, it is open. It's still trading even though the underlying isn't. So you take a look at how it's been performing this week, even with mainland China closed. Right now, it's up by close to 5%. So clearly the bullish momentum is still building behind Chinese equities, behind, of course, this ETF. And it'll be fascinating to see if we do get that follow through when it comes to flows. Already seen big flows in KWEB. Whether it continues is an open question.
Yeah, I'm looking at FXI, which tracks also Chinese big cap stocks, smaller than KWEB, $5.5 billion in assets, but that too is up about 5% right now. Yeah, 5.5%, adding to yesterday's 4.2% advance. All right, good stuff. Katie,
this was fun.
I know. Thank you for joining us on the brand new ETF report.
Yeah, I'll see you on Monday.
For ETF IQ. And again, a reminder that for all things ETF, you can watch Katie, Eric Balchunas, and myself on ETF IQ on Mondays at 12 p.m. New York time. You also have a newsletter called ETF IQ.
I certainly do. It comes out on Fridays, Bloomberg.com/newsletter.
So now we have ETFs on Wednesdays, Fridays, and Mondays. We just need to find something for Tuesday and Thursday.
Exactly. We're slowly taking over here.
All right. Thanks so much, Katie Greifeld. Coming up, we've got our exclusive conversation with Apollo CEO Marc Rowan. As the stock continues its hot streak, it's up over 20% over the past month. This is Bloomberg. Welcome to Bloomberg Markets. I'm Scarlett Fu. Let's take a look at how markets are trading right now. You have the S&P 500 modestly higher at the moment, recovering from yesterday's risk-off stance. Tech and energy are gaining, while real estate and consumer names are in the red. In terms of what's going on in the fixed income market, Treasuries giving back some of their gains following a stronger than expected print out of ADP. That, of course, leads us to the jobs report on Friday, which will help determine how the Federal Reserve moves forward with its interest rate cuts. Yields on the 10-year rising to just under 3.79%. Yesterday, they hit a low of 3.69%. The dollar is stronger right now, but I think the real story is about the yen's weakness. It's plunged at least 1% against all the major currencies after the new Japanese prime minister said the economy there is not ready for more interest rate hikes. And just mentioning oil there, $70 a barrel for WTI as oil extends yesterday's gains following the latest hostilities in the Middle East. Now, we're going to stay on the markets here because Apollo Global Management CEO Marc Rowan says that he sees no reason for the Fed to keep cutting rates to stimulate the economy right now. He explained his reasoning to our Jonathan Farrow in an exclusive interview. Take a listen.
The notion that we are spending $2 trillion in excess of what we take in peacetime with full employment does not bode well for the availability of capital to do what we need to do for the next generation. We're spending the next generation's money currently.
Do you see anyone on the campaign trail that's willing to do anything about that?
On the campaign trail, no.
In reality?
Let's hope. All we can hope for is better governance.
I've said repeatedly on Bloomberg surveillance, on Bloomberg TV, on Bloomberg radio for years that America has the privilege, the unique privilege of acting recklessly. Are we losing that?
Not yet. We have a long way to go. We have lots of examples around the globe of people who have acted recklessly for a much longer period of time than we have been acting recklessly. But we also have obligations that others do not. Right now, we are the beneficiary of being the strongest economy, the strongest capital market, the strongest military, and the best place to do business. I mean, if you tick off what's happened over the past years here, we may not like how we got here and how we financed it. 3 years ago, we decided to build infrastructure. We allocated $2 trillion. None of that's built yet. It's all being built. 2 years ago, we spent $52 billion of semiconductor subsidies to build semiconductors here. Not a single plant is open. It's all being built. A year ago, Inflation Reduction Act to encourage the manufacture of renewables. 1.3 to 2.3 trillion. No one really knows. Not a single plant is opened. We are the beneficiary and the largest recipient of foreign direct investment 3 years in a row. So people around the globe are actually figuring out we're better off here. And something tells me we're ramping defense production. All of those things are fiscally stimulative and positive for employment. Oh, by the way, we have no illegal immigration. This sets us up very well fiscally for a strong economy, which I think we're seeing.
Federal Reserve is cutting interest rates by 50 basis points. Are you in Torsten's slot camp? And you can agree or disagree with Torsten, of course. Torsten works here. He believes his economy doesn't need rate cuts. We're in a great place. Do you share that view?
I said it right. I was, I guess, unfortunate to be on TV an hour after the rate cut. I said this was a very, very expensive insurance policy.
What's expensive about it?
The notion that we would cut rates. Financial markets are wide open. Equities are at all-time high. Financing is available. Real estate prices are going up in every market. And yet we're stimulating. And we're stimulating fiscally. It is not clear that we need more rate cuts at this point in time. And to the extent we encourage growth, and growth was very strong, as you saw from GDP for the quarter, to the extent we accelerate the economy and have to go in the other direction, that would not be a good day.
Just pause. You think the Fed might have to start hiking interest rates again in 25?
I'm not saying that yet. I'm just saying I see no reason for the cutting of rates right now.
That was Apollo CEO Marc Rowan speaking with our Jonathan Ferro. And of course, you can catch more of that interview on our website, Bloomberg.com. Now, let's go back to the developing story in the Middle East, because after Iran launched yesterday's attack on Israel, Israel responded with a minimal strike at an Iranian site without provoking all-out war. For more on this developing situation, we want to bring in Bloomberg News' Bobby Ghosh, who has 3 decades of reporting in the Middle East, starting in the 90s. So, Bobby, I guess the question here is, a lot of people were thinking what happened in April might serve as a template for what happens right now, given that there was a strike against Israel, Israel responded, and it kind of just ended and was quiet for a while. Is this likely to happen again?
I'm not so sure that we can expect those certainties anymore. I think we are now in a stage where we're in the great unknown. And I say that, as you say, despite having covered the Middle East for so long in my career, I feel like we're in uncharted waters. The big question is, can Iran afford to leave it as one and done, as they did in April? In April, they gave long notice of the impending strike. They gave Israel and the U.S. and Israel's neighbors plenty of opportunities to anticipate the rockets and the missiles and stop them. This time, the rockets were much deadlier and faster moving, the cruise missiles, I beg your pardon, the ballistic missiles, and there was no notice. So this is we're in a new space here. Can Iran afford to leave it at that? I don't think so. Iran has lost a lot of prestige. Unlike in April, Iran in recent weeks has lost 2 of its most important partners, if you like, the heads of Hamas and Hezbollah. It is watching Hezbollah getting pounded, and Hezbollah is a very, very important strategic asset for Iran. It's watching that asset being degraded every day by Israeli attack. Can Iran just leave it at that? I don't think so. I think they're going to need to do something more to just try and reassert their prestige in the region, because if it fails to do so, all of its allies will start asking questions about whether they can depend on Iran to have their back.
Right. That is not a show of strength by any stretch of the imagination. We've learned that Benjamin Netanyahu and President Biden are set to speak today before Rosh Hashanah, which begins tonight. How much leverage does the U.S. have here? What can the U.S. really do to restrain Israel, or specifically Netanyahu?
Well, it's a question we've been asking on this show and others over and over again for a year now. And the short answer is not a lot. Netanyahu clearly is operating on his own agenda. And the Biden administration wags a finger disapprovingly from time to time, but is unwilling to go beyond that. The United States continues to supply Israel with the weapons it needs to conduct these operations, and I suspect those weapons will be even more important, and the U.S. will continue to supply them. The U.S. also continues to provide diplomatic cover in places like the UN and so on. The Israelis know that no matter what President Biden says, when it comes down to the brass tacks, the U.S. will have their back because there is consensus across. It's one of the few issues in this country in this very divisive moment, which is truly bipartisan, the sort of unstinting support for Israel. So I think Netanyahu can count on that to continue.
I'm curious whether you think, I mentioned Rosh Hashanah,
Yes.
The Jewish high holidays, Rosh Hashanah beginning tonight, Yom Kippur next week, also the one-year anniversary of October 7th is coming up as well. How do these factor into what Iran decides to do or what Israel decides to do?
Well, the thing with wars, Scarlett, is that once the conflict begins, and I've seen this happen in the Middle East in a number of conflicts that I've had the misfortune of covering. Once a conflict begins, then these considerations get thrown out of the window. Then all the actions involved in war are predicated on tactics and strategies that have nothing to do with larger religious considerations. They've got much more to do with, okay, this is an opportunity, we've got a target, the target is within our sights, do we strike now? When things like that happen, commanders as well as political leaders don't stop to ask about whether it is appropriate to do it on a Saturday or a Friday during prayer time or these other questions.
That's an important point, and it's something that you don't necessarily think about as a civilian. We should mention there are some headlines that have just crossed. President Biden saying that he is talking to Benjamin Netanyahu soon, and that he would not support an attack on on Iran's nuclear sites. And that's been a question that people have raised, that when Israel does decide to respond, the targets that it will take aim at, military bases, oil facilities, yes, we expect that, but will it go so far as to attack the nuclear facilities? What would that mean if Israel decides to target that?
Well, Israel has often said that it faces an existential threat from a potentially nuclear-armed Iran, and there's no gainsaying that argument. If Iran were to acquire nuclear weapons, Israel would be its number one target. So President Biden is trying to draw some red lines without using that term for obvious reasons. But again, I don't think Netanyahu will be guided by the concerns in Washington. He will be guided by what his commanders are telling him about what is possible. Is it possible to take out significant elements of Iran's nuclear arsenal or nuclear facilities? If it's possible, then is it sensible to do it now? Can they do it without risking too much in terms of Israeli lives? And those are the considerations. It won't be that much about what Washington is thinking.
Okay, good point. Another headline here, Iran's president vows a stronger response if Israel retaliates. At this point, it's more of a when Israel retaliates, because we know that that's likely coming. How stretched is Israel right now? Because it's got Gaza in the south, now it's got Iran, and dealing, of course, although you could argue that it's finished dealing with Hezbollah in the north.
No, I don't think it has finished dealing with Hezbollah. The land war there has just started. And there were some other reports that came through.
At least taking at the senior leadership.
Their leadership, yes. But now it gets to the fighters on the ground. And Israeli soldiers are being killed on that front. So that's beginning to get quite serious. So Israel is now fighting two land wars, one in the south against Hamas, and one in the north against Hezbollah. And it's fighting an air war with Iran. And that's we've been talking about the sort of regional conflict, and we've been worrying about when it would start. Guess what? I think it's already started.
Yeah.
Can Israel sustain this yes, it can, if it can rely on the support of its allies. And as long as the United States is willing to give it the backing that it has had, remember last night when those attacks took place, the U.S. participated in defending Israel. As long as Israel can count on that, then the answer is yes, it can continue to sustain this for several months at the very least.
All right, Bobby Ghosh, we'll be checking in with you again with your decades of covering the Middle East and the conflicts there. Thank you so much. Bloomberg News' Bobby Ghosh. Coming up, we've got a conversation with the CEO of StandardAero. The company is still awaiting its first trade as a public company, which is expected any minute now. Russell Ford, CEO of StandardAero, is next. This is Bloomberg. This is Bloomberg Markets. I'm Scarlett Fu. The East and Gulf Coast port strike have entered day 2. The stoppage, of course, will have ripple effects across the rest of the country and the world as some of the diverted freight ends up flowing through California ports. Joining us now is Alex Naumov. He is co-founder and chief operating officer of West Coast Shipping. So, Alex, great for you to join us. Thank you for speaking with us. First off, could you set the scene a little bit here and tell us what your company ships? Because your company name suggests that it operates out of the West Coast, but it also doesn't reveal the kind of interesting cargo that you do ship.
Thank you for having me, Scarlett. Yeah, West Coast Shipping is an international shipping company that specializes in classic cars. We offer both import and export services. We operate 3 asset-based warehouses, which service the port of New York, New Jersey, Miami, and Oakland. Our customers buy inexpensive classic cars, which for them is nostalgic to their youth ages. One of my favorite stories is a husband that was organizing his 50th anniversary, for which he was able to find the actual car that him and his wife went on their first date.
Oh, wow.
When we delivered this car out in Europe, needless to say, they both had tears in their eyes.
So for your customers, it is important for them to get their shipments as quickly as possible because they have a lot invested in it emotionally. I'm curious to hear what kind of impact you felt, what West Coast Shipping has felt from this port strike or in anticipation of this port strike for months now.
Yeah. So, Scarlett, I started this company loading containers physically myself. And unfortunately, as of today, our operations in New Jersey and Florida have stopped. And we announced to our clients that we're no longer accepting or shipping any of the cars until the strike is over. Our clients are on hold with their purchases. They are waiting for any further news from us. They're hoping that this is going to be over very quickly. But, over the years, I was very lucky to grow this company to 3 locations, and now my team has 34 people on it. I've become their friends and family. I experienced their weddings, birthdays, kids' graduations, and unfortunate events. And it's heartbreaking to think that if this strike is prolonged, we might not exist in a few months. My team deserves to provide for their families, and now we just sit and wait until further news.
But you said you have facilities in Oakland. Are you seeing more activity there? I know that you can't really do much about what's happening in New Jersey, New York, and Miami, but what does it look like for you in Oakland?
So the cargo that we are moving to Australia and New Zealand, we were successfully able to move those cars cross-country, and now they're going to go on the vessel from California. But it's a very small part of our business. Majority of it does go to Europe, where cross-country trucking is very expensive, and then you have the longer transit time going through the Panama Canal, which makes it extremely unaffordable and not interesting for our clients to do it. The cars are lower value. A lot of them need restoration, and the whole business, though, is just on hold.
Yeah, the economics don't really work out then. Is any of your cargo floating around on carriers right now?
Definitely. There's a lot of import and export containers. As a matter of fact, all of our export business, which is about 85% of what we do, has officially been stopped as of last Tuesday. So now a week ago, that's when the shipping lines officially stopped receiving any export cargo and all of our operations came to a halt. While the import cargo is just sitting outside the ports, and customers are emailing me every day concerned, everything from what happens to their cars, the delays and what else can be done, and if they can be rerouted to even Mexico or Canada, which unfortunately the ships just stand still out on the ocean as of today.
Yeah, I think you answered my question, which is, would that be a possibility? I'm sorry to hear that it's such a struggle for you right now, and good luck to you and of course, to both sides of this work stoppage, that some kind of resolution can be reached. Alex Naumov of West Coast Shipping, which ships classic cars for individual consumers, often very nostalgia-based gifts as well. Coming up, we've got a conversation with Russell Ford. He is the CEO of StandardAero, as shares of the company just began trading on the New York Stock Exchange. This is Bloomberg. This is Bloomberg Markets. I'm Scarlett Fu. It's time now for the stock of the hour, and we're watching StandardAero as the company makes its trading debut on the New York Stock Exchange. Shares of the Carlyle-backed aircraft maintenance firm opened at $31 a share after the company sold 53.25 million shares at $24 a piece in its IPO, raising a total of $1.44 billion. Joining us now from the New York Stock Exchange is Russell Ford. He is CEO of StandardAero. So, Russell, the IPO pricing above the marketed range of $20 to $23 a share after being upsized. Can you tell us a little bit about what the reception was like from investors?
You know, we're really pleased to see that opening. I think the market is validating the value that we bring to the aerospace industry for a long period of time. And I believe that the market interest we've seen is very positive.
Bloomberg had reported that Carlyle was at first looking to sell the company, but in the end it decided on an IPO. I'm curious what led to that decision and how your company can execute better now that it's publicly listed.
Well, look, there's always options for next steps as companies continue to grow. And we exercised a dual track to look at both offerings, both a public and a private track. We decided that the public track was the most appropriate track for what's going on in the aerospace industry and the opportunity for us now to access entirely new business partners that would allow StandardAero to continue to grow and provide the necessary maintenance for the increasing flying demand.
Yeah, in the end, an IPO would actually give you a higher valuation than an outright sale. So what do you think that says about valuations in the public market right now?
Well, again, it reinforces that the aerospace industry absolutely has a very bright future. The flight hours are increasing across commercial aerospace, as well as the business aviation market. The number of flight hours are increasing much faster than the number of new aircraft being added to the fleet, and that means more maintenance as engine programs live longer on top of the new programs that are being added to the market. And on the military side, there's a lot of expected investment to be made for service life extension programs of existing military programs.
So it sounds like the current shortage of commercial aircraft is definitely good for your business. What kind of projections are you making in terms of growth rates as a result of that shortage?
You know, parts in the aerospace business have always been somewhat constrained because we deal with unique materials. Fortunately for StandardAero, a big portion of our business allows us to do repair of engine components. We have one of the largest component repair businesses as part of StandardAero, greater than $500 million a year, and that allows us to provide additional solutions for our customers in case of any type of material shortages. So it actually is good for us, but it also supports our speed and ability to deliver good turn times to our customers and keep the aircraft flying.
You serve the commercial, military, and business aviation end markets. What's the breakdown between those different markets, and what do you want it to look like in 5 years' time?
We have a pretty even balance across those different subsectors. We have consciously built the company that way because those different subsectors, as you might imagine, the maintenance requirements on a commercial jet are very different than those on a military jet or on a business jet. As a result, when you get to periods of economic volatility, as we just went through, we're able to move our work and our workforce to the different sectors where there might be growth to offset sectors that are having a little bit of trouble. That allows us to work very smoothly and to dampen any type of economic perturbation.
All right, Russell Ford, really appreciate your joining us. Russell Ford is CEO of StandardAero, which debuted on the New York Stock Exchange today as a listed company, opening at $31 a share, currently at $31.30 a share. I'm Scarlett Fu, and that does it for Bloomberg Markets this hour.